So let's take a look at the markets and see what has been going on lately. In our last video, I said that things are getting a bit overheated. Bitcoin did drop around 10% to 90k after that, and it was nice to buy some more Bitcoin at a slight discount. The drop was short-lived, however, and we've been slowly grinding higher ever since. I can tell you right off the bat that the price action is not looking very interesting right now. We're still hovering around 100k. Before looking at our power law indicators, let's see what the more traditional TA indicators are showing us. Nothing special on the daily time frame. The daily RSI, stochastic RSI, and MACD have all cooled off, so there's nothing impeding an upward move over here. Now to the weekly chart. We're seeing the same early top pattern mentioned in our last video continuing to play out so far. The price action, RSI, and stochastic RSI look very similar to the same point in our last market cycle. The question now is whether it will continue playing out in the same way. If it does that, then we should expect prolonged overbought conditions while Bitcoin continues pumping much higher, more than doubling this recent move. Then Bitcoin would only have a small drop to cool off the indicators before reaching the first top. While this scenario is completely possible, you guys know my personal take on this. The longer we continue mimicking a certain price pattern, the more likely it is that we will diverge from it sooner rather than later. For example, we could have a smaller move to the upside, say to the 110k region, before having a correction, or we could start our next correction before getting there. It is difficult to tell because this type of upwards grinding price action is relatively indecisive. Sometimes these types of patterns have a final pump to the upside before having a correction, and sometimes they start a correction right away. Either way, that is likely when we will see our cool down in all of these indicators on the weekly time frame. Let's take a look at our power law indicators now. Starting with the log lock graph, the price action is still trying to hold support on top of our median power law trend line, just like in the previous cycle. So far, so good. However, if the price action does want to replicate our last cycle, the next leg higher would have to bring us very close to the first top within just a few months. Otherwise, we will have to diverge from this fractal and have something closer to a normal cycle. Now to the Bitcoin power law clock. We're at 8:51, so only 9 minutes left until 9 o'clock. We're almost there. We will likely hit 9 o'clock before my next market update because I will be going on a trip to Italy for the next few weeks. And we're still very far from the red average line, so a slight cool down in the price action is not out of the question. A cool down in this context could even mean a slower rate of growth, not just a correction to the downside. Now to the detrended oscillator relative to trend. We're still around 20% above the trend and hovering in the orange area. Relative to price shows a 16% trend deviation. Looking at this chart, we're not very far away from the projected top area. Now to the local Hurst exponent. We're still continuing our rebound from the bottom and we are past halfway up to the average topping area. So the topic of today is staying ahead of the market and actually benefiting from our power law theory and our various indicators. We have a wide audience with a lot of different investment strategies, from DCA hodling to precise timed buys and sells. I will be focusing a bit more on the timed buys and sells for today. So we have a lot of people asking us for the exact top and bottom, and we will always give you guys the same answer. We will never catch the exact top and bottom. That is not our goal, and trying to do that is actually more harmful than good, as I will be proving. What we do is that we first follow a rough projection curve, which is a precise mathematical formula produced by our full power law model. However, this curve is not everything, so trying to ask whether the top of the curve is at 215 or 220k is missing the point, because it is a smoothed out version of the actual top, as we can see in the past. Once we get closer to the actual top, we will use a confluence of indicators to produce a high confidence sell signal, which will still deviate a bit from the exact top. Watch our TradingView indicators playlist to learn more about this process. I will leave a link in the description. Even then, this signal is more like a last warning to get out before things get really bad. Not financial advice, but I personally take this one step further and actually believe in taking preemptive action before reaching a bottom or top by laddering orders. Let me give you an example of why. For example, there were a lot of people waiting for 12K in our last bear market. It was a pretty logical support area for traditional TA, even if our PowerLaw disagreed. Imagine these people waiting to buy in, seeing Bitcoin crawl back up to 20K, 30K, 50K, and before you know it, we're at like 100K. And some of these people are still waiting for 10 or 12K or something. They may have patiently waited for the entire bear market, but in the end harmed themselves more than if they had held their Bitcoin and done nothing. This indecisive behavior that comes after an initial excess of greed, manifested by trying to be as efficient as possible, is a real money killer. Even the PowerLaw is not 100% accurate. Hypothetically, there could have been people here who wanted to squeeze the last drop of juice out of Bitcoin by trying to buy in at 2K or something, and then missed out on this incredible rally. The same applies for the next top in around 1 year's time. Personally, I will start laddering sells with the non-hodl parts of my portfolio well before the next top, and treat the sell signal as a sign to exit my last positions. Remember, 100% efficiency is a delusion, but even something as low as 40 or 50% efficiency massively outperforms hodling, or God forbid, missing an entire market cycle. Make sure to watch your strategy guide, which gives you the ROI math of various efficiencies. I will leave that link in the description as well. If you do decide to perfectly catch the exact top instead, you may find yourself stuck in a situation where you're in denial after the top, looking for a bear market rally that never ends up going quite as high as you want it to in order for you to have a second chance to get out. You can probably tell that I'm speaking from experience. This is what happened to me in 2018. Even if you do end up catching the exact top or bottom, which I have sometimes done, this may still give you dangerous overconfidence for the next time. This is why I advocate moderation, because it is all about probabilities. You want to ensure maximum probability of success by excluding the parts of the price action that have the highest likelihood of doing something slightly different than usual. I know it can be very painful to wake up to like 10 or 20% green candles in the last days of the mania phase after already selling some or all of your holdings. But remember, this part of the phase is just unsustainable, pumped up froth that will collapse in a matter of days. Making sure you actually take action by locking in the bulk of the move and then compounding it by buying back in close to the bottom is by far the most important step you can do for improving your financial future. Don't take any of this as financial advice, just sharing my experience of what has and hasn't worked after going through all these different market cycles. I wish you guys a happy holiday season and a happy new year. I'll see you soon. If you'd like to support our work and prepare for the exciting mania phase, make sure to subscribe to our Lux Algo indicators or check out our merch store. This is Saverio speaking, and as always, thanks for watching.